Do you ever wonder, is the system rigged against you? Is the system designed to keep you poor? Today, we're going to talk about 5 specific examples that are designed to actually keep you poor. If you've ever struggled to build wealth, chances are you're being held back by limiting money beliefs. In today's show, we're going to talk about those common money myths that are actually keeping you broke. Listen, we all know how much the economy has changed over the past few decades, particularly the past few years. Traditional investing advice and a straightforward retirement plan may have worked for the baby boomers, but the game has definitely changed. People can't afford to move into homes these days. Baby boomers are able to, but millennials are not. Yet financial advisors, big banks, and other entities keep spouting the same financial advice that no longer works in today's landscape. Following their outdated advice will never get you the results you want. So let's get into these bad money habits right now that are perpetuated by the system and ultimately are keeping you broke. Number 1. The first bad habit that's keeping you poor is an unrealistic approach to debt. In the United States, we have a debt-based society that's centered around liabilities, right? Once we went off the gold standard in the 1970s, we no longer have an American dollar backed by really anything. It is now backed by debt. The American dream tells you that you should go into debt by buying liabilities like a home, car, and other expensive purchases. Following this advice might actually help you keep up with the Joneses, but it's never going to lead to true wealth in today's economy. Instead, what if you use the bank's money to build wealth? There's a difference between good debt and bad debt. Bad debt buys you liabilities at high interest rate, but good debt is using loans to purchase performing assets like real estate. Now, if you do this correctly, the income you generate from your asset will cover your loan payment. This is how you build your net worth and generate long-term wealth. Number 2, the second outdated money habit that's designed to keep you broke is relying on a 401k to fund your retirement. The 401k is the most prevalent retirement plan in the United States for a reason. It makes a lot of companies very wealthy and actually doesn't lead to very great results for you. In fact, mediocre results for you. In recent data from Vanguard, the average 401k balance was only $112,000 last year. These plans are not making you wealthy, and they're not intended to. They're lining the pockets of financial advisors and Wall Street. If you have a company match in your 401k, you might have an argument for its merit as a piece of your retirement plan. But for the most part, a 401k is never going to lead to wealth. It's a total lie that's been sold to Americans. So what can you do instead? Well, you can buy performing assets and consider buying alternative investments inside of a self-directed retirement account. Number 3, the next lie that you've been sold about creating wealth has to do with saving money. You've probably heard the traditional advice to automate your savings to build a nest egg. Saving money, of course, isn't a bad idea, but if it's your primary means for building wealth, you're not going to get very far. Plus, if you're parking these funds in traditional savings accounts, you're really losing money due to inflation. That's right. Every time you put $1 into a savings account with a very, very low interest rate, well, inflation is certainly outpacing that interest rate, so the value of your savings account is actually going negative. Even so-called high-yield accounts like money markets or CDs have pretty low annual percentage yields. You're never going to build wealth using these outdated accounts. So squirreling away your extra dollars into savings stems from like a scarcity mindset that has perpetuated Americans since the Great Depression. Look, it's fine to have some cash reserves on hand in case you need it to fix a water filter or something like that in your house. But storing away all of your extra money is going to keep you broke. So what's the alternative to saving money? Creating streams of income instead of a pile of cash. This outdated idea of a lump sum of cash or a nest egg, of course, is finite. It evaporates after a amount of time. Streams of income are powerful because they generate consistent passive income. Number 4, another big lie you've been sold is that a college education is the best way to build a career and create a good life. There may have been a time that a college degree was highly valuable, but the job market and the landscape of creating wealth has dramatically changed. That's not saying that all college degrees are entirely worthless, but it's not the right path for everyone. And it's certainly not the only way to make money. This computerization of business has changed the labor market, the AI market, of course. Working from home is now the new norm. You can learn new skills on the internet. The ability to create passive income through real estate is available to anyone who has the willingness to learn and take action. Number 5, the last bad money habit that's keeping you broke is putting too much merit into your credit score. And I can't tell you how many viewers of this show write to me on a regular basis and say, my credit score is this or my credit score is that. Remember, A credit score is sort of an arbitrary number that these companies have given you. And we all tie our self-worth to this score that they've given us. It's garbage. I started with a terrible credit score when I started investing in real estate. Mine was in the 500 range. So a credit score, again, is an arbitrary thing that's holding you back. I hear from people all the time who want to start investing and create wealth, but they feel discouraged because they have a low credit score. Having a bad credit score becomes part of their identity. It becomes part of this limiting belief, keeping them from even trying to reach their goals. This is crazy talk. The credit score is a system that humans designed. It's not real. The credit scoring system does not determine your potential or your value as a person. Only you do. So if you're a lazy person, then of course you're never going to build wealth. If you just sit on your butt all day and you're lazy and you don't want to take action to learn and become a real estate investor and acquiring assets and what are the steps I need to put in place to build up my financial education, then no, you're never going to be wealthy. That's not, that's part of this process. If you are lazy, that's the type of person you are. However, if you've got a bad credit score and you are super motivated and you're like, you know what, this was my past. I'm now taking action in my life. I'm turning things around and I'm going to focus and be determined to build wealth, then that number is arbitrary. It shouldn't matter at all. If this resonates with you, then let me remind you that some of the most successful real estate investors started with nothing, no money and bad credit scores. A credit score is only a small piece of your financial snapshot, and it holds little to no bearing on the level of success you can attain. I am living proof of that. I hope this video gave you some insight about some common financial beliefs and roadblocks that might be holding you back. If you're interested in more videos on wealth building, becoming more self-sufficient, creating financial freedom for you and your family, then subscribe to this channel, and we'll see you next time, everyone.